Good morning, everybody, and happy Monday. I hope you all can hear me okay. We're going to get started here in just a minute for this Monday, the first Monday of November. So thank you all for being here. I'm excited to be jumping here into the month of November after another up month and for the S&P 500 in the month of October, and that also gets to us some monthly charts that we can review, which is always exciting. So thank you all for being here. If you give us just another, few seconds, we're going to get started here right now. Okay, perfect. Cool. All right, let's get started. Again, good morning, everybody, and happy Monday. Welcome to November. This is Set the Market. I'm Serge Berger from thesteadytrader.com. We're going to spend the next 10 to 15 minutes, probably at least 15 minutes this morning, actually, going through some of the top things on my notepad. It's good to be back here in the seat in the other office. I've been very busy on the road for the past, actually 3 weeks now. So travel pause here for at least a couple of weeks before maybe another little end spurt for 2025. But we're here now, and again, excited to tackle November. November, by the way, this year is a little bit we're not going to have as many, I think, interruptions as far as holidays go, because the Thanksgiving this year is literally like one of the last few days of the month. So it's late this year. So we have essentially most of November to work through without having to get distracted, for lack of a better term, from Thanksgiving. So anyway, so that's where we're at to start off with. Let me see. If you're brand new, please make sure you do subscribe to our YouTube channel. Obviously, it doesn't cost anything, and if you can give us a thumbs up, like on all the videos, that would be very helpful. So, what are we going to walk through here? Let me just say this up front. We have a bunch of very important charts this morning to go through, and that's why I'm saying we're going to probably spend at least 15 minutes here this morning going through it. So, let's talk about the dollar. We're going to talk about the commodities, which I'm going to already touch on here in a minute when we look at this chart here on your screen, because we are starting to see some more pickup there. Then I do want to talk about what's happening in Bitcoin and Ethereum. It's not what a lot of people are thinking would have happened here now. We need to talk about the dollar, which is having another rally this morning, something we've been highlighting now for a good part of, of the past month and a half or so, that we thought that might be possible. And then I want to talk about consumer discretionary stocks as well, which I think are in a very concerning spot here for really year to date. So I think a lot of people are not really paying attention to that. Anyway, so let's start off as a reminder, and you guys know this reminder is year to date. The performance is not where people think it is. The performance year to date remains in the metal space, miners, gold miners, uranium, platinum, gold, silver. That stuff's still doing very well this morning. Gold's up about 80 basis points in the futures market. And of course, the S&P 500 and the NASDAQ are doing very well. They're up, 17%, or 23% and 70% respectively. Very, very, very strong returns. What you'll see there at the very bottom, sort of butt naked last, is the commodities. Is some individual stocks, like DXC Technology, which is one that's starting to gain some momentum. So if you're looking for a single name stock, DXC is one thing that's on our sort of radar. But let's talk a little bit more about how this folds into the sort of broader picture with the dollar. So when we're looking at the dollar this morning, and I'm just going to go and show you this way. Make it a plain white chart, and I'm going to make this full screen so everyone can see this. So this is your dollar chart, and I think everyone can draw sort of a simple line, and you can see that the dollar is essentially attempting a breakout out of whatever this sort of base is. Again, if you want to be technical about it, you can kind of make up your own narrative and draw your own lines, but it's there, right? So the question, of course, is does dollar strength translate into equity weakness? Well, to be honest with you, the answer has already been yes. It's just not reflecting in the S&P 500 because the S&P is 44% few stocks, 44% of few stocks. So what I'm trying to show you is, and this is really, really, it's been extreme for a long time, but it's getting more and more extreme. So the question is, which one of these charts is lying, right? So if you were to overlay, and I'm trying to make this a bit more visually appealing for you, right? So the dollar and stocks are not always, don't have this, don't go tick for tick. They can certainly diverge. I think what's happening right now is a pretty severe divergence. And I'm going to have to guess that if the dollar were to persist the rally for a while, that the equity market, the S&P, which is the blue line, is going to have to mean revert, right? And that really brings me to the next chart, which is showing you the equally weighted S&P versus the regular S&P 500. So I've been showing this now, and there's a lot of people talking about market broadening, and there's certainly some broadening taking place. But if you look at the average S&P 500 stock, you will notice that we are, for 12 months now, actually 11 months now, the S&P, the equal weighted S&P has done zero, absolutely nothing. Whereas the regular S&P, since November of last year, ish, around that same period, is up about 12%, right? So very strongly year to date, but up about 12% since then, or at least that's what the math shows here. Maybe I may be off a little bit, but I think it's about right, and maybe 15%, whatever, ish, right? But the equally weighted S&P is flat. But I see a lot of people out there proclaiming that there's a lot of stocks, making all-time highs, and that is true, but it's not showing up on an equally weighted S&P 500 basis. More concerningly is if we look at our momentum indicators, like our TSD trend or momentum indicator or the trend ruler, we're seeing a lot of fake momentum plays. So we've been watching a lot of stocks try to gain momentum on the upside or in the downside for that matter, and it hasn't materialized. They're kind of chopping back and forth. So I would just make sure everyone is aware of what's going on here from a market breadth perspective. Again, I'm not here to say that there's no truth at all to the market broadening, but I do think we have to keep it in context. In fact, if you look at the small caps, the Russell 2000, they too have done, literally nothing for the past, again, 11 months, right? So it's been a big run for the Russell 2000, but it's up maybe a couple percent, like that's it, right? So it's very much like the S&P. So the question is, where is this coming from? Well, what you can look at is sort of consumer discretionary names. And this is where you have, I keep mentioning, lies, damn lies, and statistics. And so when you look at, for example, the consumer discretionary sector for the S&P 500, which the best way to look at it is by looking at the performance year to date, what you'll see, I'm going to give you year to date, you can see that the consumer discretionary stocks are, from a sector perspective, up 8%, right? So the XLY ETF. So it's in the top, 5 of the leading sector or 6 of the leading sector of the S&P, up 7 or 8%. The problem is consumer discretionary sector is made up of basically Tesla and Amazon, right? And so that's an issue. Now, if you look at the broader consumer stocks more generally, this is kind of what you'll find, right? This massive bifurcation. Now, this doesn't matter to the S&P 500 until it matters. It doesn't matter so much because these are not, they have no weight or almost no weight in the S&P collectively. But you look at some of these stocks, Flowers Foods, B&G Foods, big companies like Colgate, Church & Dwight, McCormick, Henkel's AG, which is knives, Procter & Gamble, Diageo, right? These are ConAgra foods. Look at all these stocks. They're down between 10 and 80% on the high end. So if you take an average, they're probably down 30% year to date. And that's because the consumer sucks, right? So not the high end of the consumer, but the middle to low end of the consumer is losing more and more, buying power. We've been talking about, Chipotle Mexican Grill. We've been talking about, Starbucks. Some of these companies are really starting to weigh and getting weaker and weaker. And so I think it's important to keep that in mind. If you're just getting bullish up here right now, there is that to be concerned about. And I do think that is that is important to be mindful of. Okay, and again, any questions, please let us know. However, what we are also seeing at the same time, and I'm jumping now through the commodity space. If we look at the broader commodity, let me just let me give it to you here. Here. So if you look at the Bloomberg Commodity Index, and I'm finally now getting access to all the Bloomberg indices again, which has been awesome. This is the Bloomberg Commodity Index, and the ticker symbol is BCOM if you're using TradingView. If not, this is a more difficult index to get a handle of, but that's why we're here at Set the Market, giving you all this value. The Bloomberg Commodity Index, I mean, for any of you that have ever looked at a chart, you'd probably have to agree that this is not a bearish signal, right? We're seeing, 1, 2, 3, 4, 5, 6, 7, 8. It's about the 10th time right now since, or the 11th, maybe the 12th time since March of 23 that the Bloomberg Commodity Index is bumping into resistance here. At some point, it's gonna let loose, and it's gonna do one of those. One way to look at this from an allocation perspective is with the DBC ETF. It's not the same exact thing, but it's very similar. So you can see DBC is an ETF that tracks all this. So that's one way of being able to do it. So commodities, to me, within this higher inflationary environment for longer are a really interesting space. Now, before we continue, and I want to talk a little bit about Bitcoin and what's going on over there, because it's quite concerning, to be quite honest with you, in terms of not being able to see the momentum. What I do want to point out is our session this week, where we are going to be talking about extremely overbought and oversold stocks. Christian, my colleague, just put in a link into the chat box where you can sign up for this week's educational series webinar. YouTube is warning me. Let me just quickly give it to you. So you can click on that link above, and you can sign up for this week's educational video series, which is about finding extremely overbought and oversold stocks, which actually is, for me, one of the most repeatable ways of generating sort of income kind of trades in the markets. So if you want to learn more about that, we'd love to have you in that session. Again, that's taking place this week. And again, you can sign up for that educational session. It's completely free on that link here in the chat box here on YouTube. Okay, so that's that. One last thing I wanted to go through again is the Bitcoin stuff. So I made a chart here for you guys on this, and I'm going to go individually as well. But if you look at the way these things were trading, so let me just give you an absolute chart for those people that like to see that. So Bitcoin this morning, it's not a catastrophe, but it's down 2.4%. It's just more the point is it hasn't been able to keep a bid. Now, does this mean it's the end of the world and it's going to go to zero? That's not our point. The point is it hasn't been able to keep up with sort of the momentum that you would expect. So I'm a little bit concerned about it. So I'd watch it very closely. If you look at it again in through this lens, you can see, we're now also at a spot where Ethereum, which is this red line here, is starting to look weak. And then, of course, you have something like Dogecoin, which is a bit more of a joke than anything, is also looking to break down. So I'd watch these correlations here very closely. So that's a lot of stuff we went through here this morning. We went through the S&P. We went through the equal-weighted S&P. We went through the commodity space, which we think is an imminent breakout through the lens of a multi-quarter lens. Again, it's already taking place. That's nothing new, right? We are looking at, again, the somewhat concerning signs or lack of upside momentum in the Bitcoins and the Ethereums of the world. We talked about the dollar strength right now for at least a month and a half, and it continues to play out as we kind of mentioned. And I guess last but not least, we can look at the monthly charts. And so for that, what I'd like to do is kind of show you what that looks like. So for example, we can start off with Bitcoin. You can see Bitcoin once again rejected the highs in the month of October. That's the monthly chart. Very differently here is the S&P 500, of course, which went out at an all-time high on Friday, as it should. I mean, you know, if 7 stocks lead the index, you know, 44% of it. Very differently, though, is RSP. So again, the equally weighted S&P 500, which it's not trading horribly. It's just it hasn't been able to go anywhere, you know, for the past 12 months. It's just back to where it was. Doesn't mean it's going to fall apart, but it shows you that the broad market is nowhere near as strong as I think some people are led to believe. You know, and speaking of led to believe, you can see consumer discretionary stocks, which we talked about before. Yes, they haven't really done much all year, but they are looking way stronger on a sector level than they really are, you know, as far as the actual sector is concerned. So that's a lot of stuff we went through here this morning. I hope this was helpful for everybody. Again, if you are interested in learning how we can find extremely overbought and oversold stocks and generating sort of an income strategy from that, or even day trading with it, that's our topic here this week. So we look forward to seeing you guys in that session. You can sign up for that for completely free in the chat box. Other than that, we will see all of you guys that are ETF Silo Pro members. We'll see you in about 40 minutes at the top of the hour for an exclusive member session where we're going to go through more detail on different sectors and groups and parts of the market that we are liking and some not liking, and kind of show you our process with all that. So we'll see you guys back here tomorrow morning in Set the Market. Believe it or not, I think we have a full week here, Monday, Tuesday, Wednesday, Thursday of Set the Market. I think next week too. So I shouldn't be having a whole lot of interruptions here in Set the Market for the next couple of weeks. See you guys back here tomorrow morning and again in this week's educational session. And if you're an ETF Silo Pro member, in about 40 minutes at the top of the hour. Thanks for being here. Please like and subscribe. Very important so we can continue to do the morning show. Please share the wealth, and hopefully this is helpful. Any feedback, let us know. We're giving you a lot of value here. This is obviously open up on YouTube here, so hopefully this is something you guys enjoy. We also, by the way, on the YouTube channel, and just in the off chance you haven't noticed, put up a lot of different content. We put up posts as well with important charts. Go look at our posts, by the way, on the SMH chart. That's the semiconductors chart. I would encourage you to look at that. I posted something really crucial a few days ago last week at a conference in Atlanta as well on the chances of investors making money picking individual stocks. Very low, by the way. We put up fun YouTube shorts, educational stuff, and some just stuff there to note of as well. So anyway, a lot of reasons to subscribe to the YouTube channel. It's free, at least so far. And we'll see you guys back here tomorrow morning. Take care.